and welcome. You're watching Business Today Television. I'm Sakshi Batra. With me is Shail Patnagar, and this is Market Today, a show where we'll help you understand the closing action on the day street. Well, as far as the markets are concerned, we are off the lowest point of the day, and that is probably the only positive that we can highlight as of now. 670 points lower on the Nifty. 24,000 is with us again. So we are just about 2.7% now down in trade for the Nifty. The Nifty Bank also 2.5% down, 50,078, 1270 points gone there. Across the board, all the sectors are still down in the red. You do have very few stocks, just about handful of them, that are still holding up into the green as far as the Nifty stocks are concerned, especially from the FMCG in the pharma pack. HUL, Nestle, Tata Consumer Products, Apollo Hospitals, Britannia, and now HDFC Life is also pulling itself up into the green. But largely, it's a deep sea of red across the board. We just have to see whether, towards the end of the session, we are able to stick close to the key support levels for the Nifty right now. Good afternoon, Shail.
Good afternoon, ladies and gentlemen. As Sakshi has summed it very well, we have nothing much to add except for the fact that if you believe in relative pain, then the Nikkei has closed 12% lower. We are down just 2.7%. So have faith in this fact that whatever has happened in the markets today is because of external crisis. There is nothing that has gone wrong with Indian markets except for the fact that across the world we have a global liquidity cycle which seems to have paused somewhere in Japan. They have raised their interest rates by 0.25 percentage points, and globally Japan was the source of the cheapest capital. Now that capital, because of fears of further raise in interest rates in Japan, is moving from all parts of the world, from all riskier assets, and going back to Japan. And that's the reason why you see this sell-off, which has been also accelerated by muted earnings on Wall Street. So there's problem in US, there's problem in Japan. Both of them are paying a very high price of that problem, and in sympathy, our markets are also losing ground. Is this the worst over? Do we have more pain in the pipeline? What should you be buying? More importantly, where should you be booking profit? We have all those questions and a lot more for Mr. Brijesh Singh, Senior Technical Analyst at Stock Access, who's joined us. Sakshi, before you came in, Mr. Singh and I were having a conversation, and I was telling him that आप तो ब्रज के राजा हैं, आपके राज में ये सब हो रहा है, इतनी गिरावट, क्या कीजिए? तो अब सिंह साहब का जो जवाब था वो दोबारा दोहराएंगे.
मैं उसमें एक चीज और ऐड करूंगा. फर्स्ट ऑफ ऑल गुड आफ्टरनून टू एवरीवन. ब्रजेश का अगर आप संधि विच्छेद करते हैं हिंदी में, तो ब्रज धन एश, धन मतलब प्लस साइन, उसका मतलब भी ब्रज का राजा होता है. बट मैं कोई ब्रज का राजा नहीं हूँ. Summing up the market, see what we have been looking out, there was a clue, like, when in the month June, when the 4th of June, especially election figure, we were talking about when the NDA would be getting 400 plus or BJP would be getting 400. Nothing had gone wrong in that. Still, the government has formed 240 plus for the BJP. Still, it has been going fine. Nothing wrong with the economic part. What you have said. After that, then the 23rd or 24th, if I'm not mistaken, there was a budget. Again, that same thing happened. We made a low. If I talk about Nifty panic low was 24,078, and from there Nifty made a high of 25,078 points. That was roughly around 1,000 points of rally we have seen. Now, if we see that from that point till now, 23,893 precisely, Nifty got corrected of 1,185 points has been corrected in Nifty. Now, if we look out the resistance band, 24,150, 24,250, this is the immediate resistance band. If we are surpassing this level, then the next level to watch, from where the short-term trading, from negative to people would be saying from negative to consolidation to a positive side, that would be 24,600, 650 man. Otherwise, the next level to watch right now, immediate support would be 23,850, precisely 30-40 point low from the recent swing low. If we are breaking that, then the next level to watch would be 23,200 to 23,000 300. That is the support which we are looking for. The Nifty has been considered. If we look about the
Yeah, one very interesting point, Brijesh, I failed to mention. The number that you see on the Nifty at the moment, 24,057, 24,070, 24,040 odd is the budget day low. That is being tested at this point of time. Remember, if this breaks, then you have more pain in the offing. Singh Saab, you were saying something.
Yeah, so if we talk about the Bank Nifty, the high which Bank Nifty had made, that is 53,357, and till now Bank Nifty made a low of 49,719. That comes around 3,638 points of correction from a top we have seen already. Now looking at this part, even if we look out the hourly chart or 4-hourly chart or daily chart or weekly chart, somewhere in hourly as well as 4-hourly chart, we have seen already the negative divergent price was making higher, but the oscillators were making lower highs formation. Now, which indicates that the correction would be coming. Immediate support for the Bank Nifty has been considered, that is 49,200 followed by 49,800. So we have to look out 49,800. That should not be broken. If that breaks, then another 600 points of downside can be seen. Regarding with the higher side of resistance, that is 50,600, 50,700, but it has to give closing 1,200 to make a confirmation that the panic selling has been absorbed, and now again the fresh rally of upside can be seen. So right now for Nifty as well as the Bank Nifty, it looked like we might first retest the support which I have just updated to you, and then from there we might see a smart money coming up in the play, and the buying can be seen in coming days.
ओके ब्रिजेश जी, आज की गिरावट में आपने कहीं कुछ खरीदा या कुछ खरीदने की एडवाइस दे रहे हैं, और आर यू स्टेइंग ऑन द साइड लाइन्स?
पर्सनली तो कुछ मैं ट्रेड करता नहीं हूँ. आई डोंट ट्रेड इन any of the stock, but even in for the company which I work, we are sitting right now, we are just watching. We don't know how much downside it can be.
Yes.
Can go. Let it make a base formation. एक support level पे आता है तो risk reward ratio आपके favor में आता है. That is a consider when you are playing with the technical front. When the risks are high and the rewards are low, better to sit idle. Let the dust calm down, and then we can come up. एक नहीं 2 call दे देंगे, आप 3 call दे देंगे उस time. But let the base be formed.
Sakshi, I'll request the PCR to draw a longer term chart of the Nifty. Now, I wish we could show you a couple of moving averages. So what has happened is that on the gap down today, there was a 400 point gap down, and the Nifty went past the 21-day exponential moving average in less than 1/10 of a nanosecond. 9:15 and 1/10 of a nanosecond down. So 21 never came to anybody's support. Now at this moment we are testing the 50-day EMA, which is 23,964. Now this has held. It has held at least for the last 3 hours at least that we are seeing in trade, and beyond this the gap is very sharp. I don't even want to talk about it, but let us see. And there is no point catching a falling knife. We'll again wait for Wall Street to open up, and then look at what the reaction is of Nikkei tomorrow morning, and then maybe take a call. There is we've done enough work for 4 years on an intraday basis. Let's just rest for 3-4 days, wait for this pain to settle down. Even today, Sakshi, while the underlying is really bad, there isn't much of a volume led selling pressure, primarily on the understanding that you opened 400 points down, वहाँ से आप क्या बिकवाली और करोगे. But for the record, Zomato is down 2%, and the volume is 3,600 crores. I think on Friday it was 9,200 crores. So nothing much is happening in terms of pain. HDFC Bank is down 2.5%, less than the Nifty. Tata Motors is down 6.5%. SBI is down 4%. Reliance is down 3.5%. And then of course you have Infosys down 4%. So out of the first 8 top traded counters by volume on NSE 500, 8 of them are into losses. That's a bit of a pain, but then what can be done? This is a kind of global sell-off that's happening because of technical readjustment of the Japanese yen versus the US dollar. Brajesh ji, would you suggest ETFs? Would you suggest an extra sip on mutual funds for the month of August? As a long time watcher of the markets, we know that buying the panic works, but the only point at this point of time is, till when will the panic last?
Sally, as we all know, fear and greed are the two factors in the market. No doubt, if someone wants to, if they don't have that much of knowledge, the better would be from the mutual fund SIP. But that would be the best part to play with the market. And when you are doing that way, when someone is buying for the mutual fund, they are not looking for a 1 month, 2 month, or a 3 month or 6 month of scenario. They are looking for at least for a 1 year to 2 year time frame. So if someone has a view of say 1 year to 2 year time frame and they don't have that much of time or they don't have that much of knowledge about the market, better to do SIP in the market with a good mutual fund. They can give you the better return. Still, as I am been saying, that story of India has not been over. This that type of glitch would be coming. See, either right now you have talked कि US का yen से था, जो भी factors हैं, market is just requiring some news to move down or move up. So this are the, we have already seen the parties from so many months. Now there is one glitch came up and it would be for a month time frame or for a couple of month of time frame, or say some level would be there where it would be making a base, and from there again the new rally would be coming up. So if someone has a view of 1 year or 2 year down the line time frame, nothing wrong in the market. Still market is in the stronger hand. But this type of correction is a healthy correction which should be there in the market.
Healthy correction and should be there in the market. But where would you find value, Brijesh ji, within this market? Do you think the safe haven spaces are FMCG, just the way we are seeing a few of the large cap FMCG names which did not move at all over the last 4 years? Stocks like HUL, Britannia, they are the ones that are moving. Do you think that this is only a knee-jerk reaction for the days when the correction is there, or do you really see value in these FMCG names?
Because actually, as we all know, regarding with the FMCG pack has been considered, whether that be Godrej Consumer, Britannia, Marico, or any of like that. In monsoon season, we see FMCG stocks, chemical stocks moves up, followed by the auto and all and other stuff. Now, if someone wants to play with FMCG stack, no doubt, Marico today the result has been there. It's still on the chart front, it looks good. Godrej Consumer, Dower also look good. But your view should be, at least when you are doing if you are trading also, not an intraday point of view, but if your view is for say 1 month or 2 months, always or even in investment. Suppose if you are doing investment, at least buy in partial level. 2 to 3 type of investment can be done if your one part is going wrong, and if it is going down, you can do accumulation can be done. So right now in smaller, if I say, like suppose look out say Nifty 50 or Nifty 500 stock, and whichever the stocks closed on a green note, that indicates that they are still, that chart has been strong or the fundamental has been strong. There is nothing wrong in that company.
Sakshi, the point is that even at the moment the futures markets on Wall Street are in pain. So Dow futures are down about 1.2%. Nasdaq futures, so I don't even want to mention. So this pain is most likely to continue, and the S&P 500 futures, they are also down about 1.9%. So that's a pain, and you can't avoid pain in the market. A lot of people have been talking about this fantastic rally. Just last week we were celebrating 25,000, and in the blink of an eye, you're down 1,000 points. You remember the high was, I think if I'm not mistaken, 25,070 on the Nifty, and we are at 24,074, 24,100 at the moment. My understanding is that the market will make peace with the budget day low today, and then maybe start its downward journey in a day or so. Because of the limited visibility that we have Brijesh ji, on this crisis, what would be a theoretical or a practical downtick that you see on the Nifty in a couple of days?
So as I've talked about, see, Nifty still made a low of 23,893, and I was been talking my first support level would be 23,850, that is 30-40 points around. So that is a level of the first support, but I feel that still trend it's been down, and for that thing to go wrong against the view which I am looking for, Nifty has to give first closing about 21,250. If we are able to this, then we can see a sharp pullback towards the level of 21,600 or 650. If we are not able to give closing about 21,250, then I feel that the 23,850 would be breaking, and we might test the downside level of say 23,200 to 300 odd points.
Okay. How about the Bank Nifty? Where do you see that after the 1300 point downtick we have seen today?
So if I talk about the Bank Nifty part, as I was been updating, already 3,638 points of correction has been seen from the top. The top which Bank Nifty made was 53,357, and till now low is 49,719. Now, if we are breaking this level right now, Bank Nifty is trading around 50,190 around point, and if we are breaking the level of say 49,800 on downside, or even even giving a closing below that would be giving an invitation towards 49,200. Another 600 or 700 points of correction can be seen on that. And if the 49,200 if it doesn't want to come, then Bank Nifty has to give closing above 50,600 or 700 points. So another say 500 points of upside if it comes, then we can see okay, the bottom has been made, and from there we can see an upside. But as I've said, both the indices, if I look out the hourly chart or the 4-hour chart or the daily chart, they have broken the important long-term moving average. So it's very hard to cross them very easily.
Sakshi, it's not just a moving average that needs to be crossed, broken, or taken up. It's, look at the sentiment of the market. I'll give you an interesting data. Within the advanced decline ratios, we track 90 indices, as all of us very well. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 indices out of 19 have not even a single gainer. So that shows where sentiment is headed. In the small cap 100 index, Sakshi, out of 100 stocks, 100 of them are in the red. In mid cap index, 100 shares of the mid cap index, only 4 are in the green. So that basically tells you what the market is thinking. It may be stabilizing around 24,100, 24,050, 24,000, but the pain is not going to go overnight. So this is something that, as we have celebrated 2 percentage point upticks, as we have celebrated 8 weeks of continuous rally,
Yes.
we have to sort of, give back something to the market. Now the only issue is that this taking back by the market has come by the very rapid pace.
Yeah.
And that is what is sort of aggravating this pain. If this were to be spread over, maybe a week or so, a 5 percentage point correction, you won't even bat an eyelid. But what a 2,500 point cut on the Sensex. It's a bit painful,
Yeah.
And it's about 15 lakh crores of market cap sort of extinguished in the blink of an eye.
It's definitely painful right there. And stocks like Samvardhan Motherson, that have
Exactly.
been the star performers of this recent run up. Look at the kind of intraday move on the downside that we are seeing there. 9.5% lower in trade for Samvardhan Motherson. Now, Brijesh, I want to understand from you. A lot of analysts had placed their bets on stocks like Samvardhan, maybe Uno, Minda as well, and several such names which have actually outperformed in the recent run-up. Now, for all those investors who've been holding on, would it be a wise advice to average out these stocks, looking at there is nothing wrong in the fundamentals, or do you think enough and more has been done up and probably the markets will not be able to reward it consistently the way they were, these stocks?
So Sakshi, whenever such type of correction comes, the correction is always deeper and faster as compared to climbing anything. Generally सीढ़ी चढ़ना आसान होता है, ऊपर से नीचे से ऊपर जाने में डिफिकल्टी होती है, ऊपर से गिरना में बहुत इजीली गिर जाता है. तो such type of corrections are always surprising as well as very fast and very deep also. As an investor, suppose someone has bought it, so there are investors. So most of the investor would be from a fundamental point of view. Technical में तो कुछ change, जो भी correction आया, whatever the correction has come up, as Salji was been talking about, as I was been talking, like moving average break हुआ या मान के चलो कोई pattern breakout हुआ, breakdown हुआ, this thing happens. But if your view is for 1 year time frame of any of the stocks, and minimum I am taking around, there is nothing wrong holding that stock. Let it, suppose if it has gone down, so एक सर्टन लेवल पे जाके पहले उसको एक बेस बनाने दीजिए. थिंग हैज इन एनी ऑफ द स्टॉक, लेट इट मेक अ बेस. पैनिक वाला करके ऊपर जाता है, दैट इज नॉट दैट. टेक्निकल में वो चलता नहीं है, वो फिर रीटेस्ट होता है. सो इफ सम चार्ट और सम स्टॉक हैड फॉर्म द बेस, देयर यू कैन गो एंड यू कैन एक्यूमुलेट दैट स्टॉक एंड लुक फॉर द व्हाटएवर द टारगेट यू आर बीन लुकिंग अराउंड. So I feel for investors nothing wrong. This type of whenever corrections are coming is that to buy, but look for the time frame of at least 1 year. As a technical front from our side or from a trader point of view, I would be saying don't be in a hurry. Let the dust be settled, and then we can look out for a trade either on the long side or on the short side.
2.53% downtick on the Nifty is actually accompanied by a 40% rise on the India VIX. I'm just requesting the PCI to plot the India VIX if you can. And 40.5% is not the maximum that it had gone up to, Sakshi. You were mentioning, what was the number that you have in mind? 53?
Which one?
India VIX.
52% higher it was in the morning, but right now it's up 40.6%, so 20.13, so it's still better off, but it's gone up to 52% higher.
Yeah, and that translates to 23.23, which is the highest since the day of elections
count. Day, yeah.
So now look at how the market is getting correlated. VIX is highest since election counting day. And the Nifty at the moment is testing the budget lows. So lots of mathematical numbers working in the markets. Let's see who succeeds and who doesn't. But at this point of time, Sakshi, I have at least one good news.
Yeah.
Lal Path Lab. क्या करे, बड़े मुश्किल से कोई एक स्टॉक मिला.
I have one more.
Tell me.
PCBL, something that you were tracking.
Yes. Philips Carbon Black. So I think Philips is up 5% if I am not wrong. It will just come on the screen. 4%. Wonderful. It was up 5% at 396.9, so you will add a percentage point there. So these two stocks both at record highs, ladies and gentlemen. एक कार्बन ब्लैक बनाते हैं और एक आपके ब्लड प्रेशर का टेस्ट करते हैं. तो these two stocks are doing pretty well. It's very difficult for me to request Singh साहब to do a technical check, कहीं नज़र ना लग जाए और फिर लेने के देने ना पड़ जाए. And I think there is some life in insurance stocks.
Yeah.
I also saw HDFC Life in the green. Ladies and gentlemen, this is a stock to see. The low was 690. At the moment, it's at 712, and over yesterday, it's a 5 rupee rise. So this is something positive. NIACL was in the green. I remember very, very clearly in early morning trade. Okay, so NIACL has slipped, and HDFC Life is up 5 rupees. So 3 stocks: HDFC Life, PCBL, and Lal Path Lab from our sides, ladies and gentlemen. Sakshi.
LIC is down by 6.6%, although within that, well, we are looking at the insurance space. Remember, this is the one stock that recovered and pulled the entire rally in the last 1 week, 10 days odd. 7% lower, but for LIC right now, contradicting names that are coming in. Private players definitely doing much better than the PSU names within the insurance basket right now. Brijesh ji, a lot of fundamental experts are now thinking that probably this is the time for turning the tide within the insurance space. Technically भी कुछ ऐसा लग रहा है क्या?
So जैसे अभी आप बात करते हैं, you've been talking about the HDFC Life.
Yeah.
Yeah. So you've been talking about the HDFC Life insurance. The chart is still promising. With trading with higher tops and higher bottom formation on the daily chart. A couple of days back it made a high of 722, and now today's low was 690, and now it's been trading a day high of 712. Nothing wrong in it. Buying at the present rate with keeping a stop loss of 700 and looking for target of 730 to 735 in a short term. So that's what I've been talking about. The stocks, if someone wants to play long, just look Nifty 50 or Nifty 200 or Nifty 500 with stocks on hourly basis or on daily basis are trading with the on the positive zone, and you'll get the answer. Like Sahilji was been talking about ECBL है, शोभा है, तेजस नेटवर्क है, क्रेटा सैनिटरीवेयर है.
Let's look at Paras Defense as well. Numbers coming in for this defense player. Let me just read out the numbers for you. Although it's a very good performance, but the stock has also reacted very positively. The numbers are a very sharp rise in profit. First quarter consolidated net profit is 14.9 crores versus 6 crores. And the top line has risen to 83.6 crores in the quarter gone by versus 48.3 crores year on year. EBITDA has gone up, and EBITDA margin at 28.86 is far ahead of 22.41 a year ago. And no surprise here, if you look at the low of the counter, Sakshi, it was down 5%.
Yeah.
And look at it now, it's up 4%.
Wow.
तो अच्छी खबर बाजार छोड़ता नहीं है.
Trying to grab onto any opportunity or any light at the end of the tunnel that's coming in at this point in time, which actually shows us that the bulls are not yet ready to feel exhausted, run away after that stellar run up right here. I hope that at least that is the case after today's fall. But I think there is some kind of recovery even in the US futures also, I believe, Shell. So that could actually give us some kind of an indication that probably tonight will be better than Friday's night for US.
Sakshi, I don't want to stick my neck out. I know for one thing, when paint starts with a 2.5%, 3% downtick, then that pain extends. So you could just see it as a dead cat bounce.
Yeah.
Even the Nikkei had actually bounced back very sharply from intraday lows, but a 12% cut on a single day on the index, it's wiped out the year to date performance, it's wiped out all moving averages, and at the moment the Nikkei is at its lowest since I think last I checked it was December 2023. Let me just get that number right for you. Okay, I just want to, okay, yes, this is the lowest Sakshi since 31st October 2023. So, do or art, it's a 10-month low happening in the blink of an eye. And
the pain point is because I think Japanese people, government, investors, they would have waited for so many years. I think about 20-25 years to see that record high really come in just the month of July, and within just few weeks, that it was like momentary pleasure.
So I was in 8th standard when the previous high happened.
Wow. So that's
and perhaps that's the reason why I'm in the markets these days after 34 years. But that's the journey. and I can tell you a lot of interesting things. A 25% correction from July 11th to today on the Nikkei is because of a 8-9 percentage point correction in the currency. So that is the impact of a currency trade, that equities just take it on the chin. Sakshi, the number that you are seeing on USD JPY Forex twin trade is last seen in July 1990. So you can well imagine the pain that it is causing. Let me just get that graphic for you. Meantime, Brijesh ji will comment on this one. This stock that's doing reasonably well despite the carnage. Brijesh ji, Zomato, not much of pain, just 2.5% lower. The top traded counter, and even today the volumes are somewhere like 3,800 crores. What are the medium term charts of Zomato telling you?
So if we talk about the medium term scenario, the stock, if doesn't break say 210 or 220 odd level, then we can see stock touching 320, 330 odd. But for short term bet is been considered, then I'll say that 235, 240 is a support. If it holds, then we can see at least stock touching 285 to 290 odd.
Okay, one or two more stocks that are still holding up in this carnage. I'll pull up Cera Sanitaryware. Look at the stock, it's now up 6% in trade with a kind of, gravity defying move that has come in for this one. 6.06% higher, 9484 with volumes after the second half of the trading session emerged. That's where the buying came in for this stock. And since you were talking about Zomato, and within that food space, Devyani International, that also up. I think about 2.5-3% higher in trade. Let's get in Brijesh ji to help us with any momentum, any strategy that one can adopt here on these two stocks. Building material space.
Sakshi, I have already written, two stocks, on a buying list, and that was one was Devyani International, 180 rupees around. It's been at that time it was been quoting, now it is 182 and a half. Stop loss 174 and go for the target of 192 to 194. Regarding with the ceramic has been considered, then right now 9,430 around the stock has been quoting. One can keep a strict stop loss of 9,100 and upside play for the target of 9,800 to 9,900.
Got it. So that's an interesting one, Cera Sanitary, and you have Devyani International that Brijesh ji is also betting big on right now. Beyond this, Brijesh ji, I think it will be key to understand from you for tomorrow. What would you advise as a strategy for investors?
See, as I have said, and I have been saying, there is nothing wrong in this type of market whenever such type of correction comes. So if you are an investor, use this type of correction, use an opportunity to invest in good stocks, and don't think that no one is able to predict or able to catch the bottoms and tops. If you are going wrong, the only part is don't be fully invested. Invest in a SIP mode of, suppose XYZ. We take an example of say Cera Ceramics or Sanitaryware or Devyani. If you want to invest, do in a part investment, 1, 2 part, 3 part of investment can be done. But stick with the strict stop loss that should be maintained. If your stop loss is it, get out from that stock to safeguard your capital.
Okay, one interesting thought I'd just like to introduce, Sakshi. A vast majority of the Indian investing populace is now an intraday kind of a market. But for those sensible people who are in the world of mutual funds, ladies and gentlemen, please let your SIPs continue. Do not pause them. This is the time when the SIP will work best, when fund managers will deploy your monthly uh, hard-earned money to buy stocks which make sense and which makes all the more sense at better prices. Now, what you can also do is, a lot of people, Sakshi, have been sending me messages since morning. What do we do today? Do we buy ETFs? Do we put in an extra SIP?
Correct.
Do we make a fresh SIP? Ladies and gentlemen, whatever you do, don't do it at one shot. So if you intend to invest, please make 5 equal boxes of that investment. Suppose you want to invest 5,000 rupees. So 1,000 rupees every other day, please invest in the market. You may not be able to catch the bottom or a falling knife which really rests at the bottom, but what you will be doing is sensibly buying into this downturn, and that's the best possible way to make your money work. Don't invest at one go. Don't invest a lump sum at this point of time, and on a daily basis, whatever money you want to put in, break it into 5-7 pieces, and at the end of the day just buy the NAV of a fund that you are already in. If you are keen to do an ETF, maybe that as well, but buy piecemeal, and more importantly, please do not stop your sip.
All right, a very important one at that. I hope you all have taken that now note down as well. We'll now start to invite our other guest on the show. We have now with us Mr. Amit Goyal, the co-founder and the chief global strategist at Pace 360, joining in. Amit, warm welcome, and thank you so much for taking the time out for this discussion. A tough day. I'm sure you would have got at least 1,000 calls since morning. What should be done in this market, and are we headed for a deeper correction ahead? Should I pull out my money? Should I put in more money? So many of calls. How have you addressed investors' concerns through the course of the day?
Thank you, Sakshi, for having me on. So, yes, we've been getting a lot of calls, but with a little bit of difference. In our case, most of the calls are actually congratulatory calls. Because we've been out of the market. We bought the market around the budget time, and then when the market went above 25,000, we just sold off everything, and we've been sitting on because we are a multi-asset fund manager. So we've been sitting on assets, and we have started buying only today.
Okay.
So we were effectively at 0% equity till yesterday, but we've started buying today, and we'll now buy over the next few days. So this is one, Sakshi. Secondly, it is my firm belief that on a longer term basis, we are in a bubble. So the longer time frame you take, if you take a 3-year time frame, we are in a bigger bubble than we are if you take a 1 month or a 2-month time frame. So it is my firm belief that it is not just the Indian market which is in a bubble zone. It is the US markets, the Japanese markets, the South Korean markets, the Taiwanese, and so many markets of the world. So this bubble bursting process has started in July of this year, and it's going to go a long way from here. But here is the most important thing. The investors will get some amazing opportunities to buy the market and then to sell in euphoria. Because sometimes what happens is that when the market is in a one-sided bull run, you do not get entry points. In a market which is as volatile as this one, and a market which is as sensitive to the global developments as this one, you will get both ways opportunities. And I completely agree with you guys that this is not a time to panic. The time to panic was a few days back when there was euphoria. When the smart money was getting out, that was the time to panic. But now that the whole world is panicking, this is definitely not the time to panic. This is a time to keep buying in tranches every single day. And then when the market normalizes itself, when the market goes back into that euphoric state, which it was till, let's say, a few days back, that would again be the time to panic. So it's the time to be greedy right now, and the time to be fearful is going to be the time when everyone around you is celebrating the bull run, which is what the situation was till a few days back. So we are just handling things with a little bit of difference. We've been doing this for the last 29 years, and I believe that there is a lot of money to be made in the markets for long only investors. I'm not talking about investors who can also go short on the market. I'm talking about long only investors. There is a lot of money to be made over the next 2 to 3 years.
Right. Amitji, a very warm welcome to you, sir. And lots of people have been calling the end of this bubble for decades, and sometimes the bubble does give you an opportunity to deflate, as it did in 2005, to some extent in the taper tantrum, to some extent even in the Chinese problems that we faced in 2015, 2016. Where do you see the Nifty headed, and till what point of time will you continue buying this downtrend? Do you have a value of the Nifty in mind, or do you have a price threshold for stocks that you are buying into?
So we are not buying into stocks. We are only buying into ETFs. And I think buying stocks is a little riskier than usual because of the way that, because of the fact that so many stocks have gone into triple digit ratios. So there are so many stocks which are so expensive. Even FMCG stocks are quoting at 50-60p ratios, which is completely insane. There is no other geography, there is no other equity market in the whole world where your FMCG stocks would trade at a P ratio of more than 50, where your electronic contractual manufacturing guys would trade at a P ratio of more than 100. There is no other market in the world. There is no other market in the world where the real estate stocks can trade at anything from 60 to 70 P ratio to 200, 300 P ratio. So what we are doing is, we are trying to remove the sectors where we know there is a very, very clear and the bubble is bigger than the other parts of the market. And we are buying into relatively the cheaper parts of the market, which have also taken a knock in the last few days. So, for example, we are also buying Bank Nifty at the moment. We are buying Nifty PSE, where the P ratio is still in low double digits. So we are choosing the sectors where we believe there is a lesser bubble or there is no bubble, and we are buying ETFs of those sectors and subsectors. That is what we are doing. This is one. Secondly, as far as the bottom of this particular correction is concerned, I think this is the first real hammering after the peak of 25,000. So I think 23,400, 23,500 is probably par for the course. So one should keep buying on the way down. But I'm again telling you, and I would again want to request your audience that this is not a time to take a very long-term view of the Indian market, because this is not a great entry point. History of the last 50 years suggests that the best time to buy the Indian market is when the P ratio is anything from 10 to 16. The P ratio today, even after this correction, is still more than 20 for Nifty, and it is still more than 30 for small cap and mid cap. So this is not a time to take a long-term call on the market. This is a time when you should have a diversified portfolio which also contains fixed income, which also contains precious metals, which is, for example, our approach. And secondly, always sell the euphoria and buy the panic. There was euphoria till a few days back. There is panic today. You buy the panic, and 2 weeks down the line, when USD yen would have normalized, US equity markets may have normalized, and the India VIX from 20 would have come down to maybe 13. That would be the time to sell again.
Right.
Yeah.
But Mr. Goel, let me just take back to your own comments a couple of weeks ago, when the market was in absolute euphoria on the Indian equity side. Your allocation to equity at that point of time was near nil. So
Yeah.
at the moment, it's a very sensible strategy to get into equities, as you
Yes.
very rightly say, by the panic. But you really did not enjoy the euphoria.
No, we did not enjoy the last bit of the euphoria, and we never do. In the last 29 years, we have never been a part of the market when there is euphoria and the bubble is so overblown that literally you do not even need a pin prick. You just need to bring a small needle close to the bubble and the bubble can get burst. So we would always miss, but because please do bear in mind that we are not a equity PMS. We are not an equity asset management company. We are a multi-asset PMS, multi-asset asset management company. And even when we do not participate in equity, it doesn't mean that we would put the money into a savings account or a let's say a liquid fund at 7% return. We at any point of time when we are not participating in equity, our minimum threshold has always been 15%. So that is what I'm telling you, that the approach right now should be that you keep making your 15, 16, 17% return in other asset classes, and there is no dearth of asset classes which will give you that kind of return at the height of a bull market. And then whenever there is a bloody correction like this one, or there was one on the election day, we were literally a very aggressive buyer on 4th of June, which was the election day. So basically, the idea is to keep making your 16%, and then when you get an opportunity, just shift your money from short-term fixed income to your that part of the portfolio which is in short-term fixed income into equities. Make your 5 to 10% kind of return over the next few weeks, and then go back into making your 15, 16%. This is exactly what we've been doing for 29 years, and we have absolutely no remorse that we missed the bubble in March of 2000. We were not in the market for the last 6 weeks and the stocks went up like crazy. We were not in the markets in December to January of 2007, 2008, and the stocks were going up like crazy, so on and so forth. It is not the first time that we've missed the last bit of the euphoria. It's not going to be the last time. We purposely want to do that because we want to keep a safe distance from getting trapped in a bubble at valuations where you will take years and years to get out of the market. That is not acceptable to us. It is acceptable to us to miss the last 2, 3, 4%, whatever is required. We would hungrily and eagerly want to miss out on that and keep making our 15, 16% in other asset classes and then come back into equities whenever there's a panic. And this is, I think, a very good opportunity this time around as well.
Mr. Goel, thank you for such a wonderful discourse on how Pace Global times markets perfectly and is frugal when it comes to seeking returns. I believe that's worked out very well for you in the previous decades as well, and let's hope it does so over the next 5, 7, 10 months as well. Ladies and gentlemen, as they say, when bad news comes, it comes in droves. And not only do we have a massive correction on the Indian markets, our neighborhood is also having a troubling time. A lot of global news outlets, including Aaj Tak, are reporting that Sheikh Hasina, the Bangladesh PM, has quit because of continuing road protests against her rule. This again, as we are saying, we are quoting Aaj Tak as also a lot of other media organizations. It seems that she's left her official residence in a chopper and is headed to take a plane out of the country, and thousands of people have stormed the Bangladeshi PM's house. This is not good news at a time when sentiment on the Lal Street is already at a low ebb. Sakshi.
Absolutely. So that's the news via media reports now coming into us from Bangladesh. Bangladesh Prime Minister has quit. Reportedly, she is London bound. We do not know whether there is any confirmation on that. She has reportedly left Dhaka in a chopper. We also know that thousands of people have stormed Bangladesh Prime Minister's home. Protesters are on a looting spree at Prime Minister's home is what we are told. And also both Sheikh Hasina and her sister Rihanna Farhana have left apparently from Dhaka. That is the news that we are getting, and Bangladesh army seems to be in a position to be taking that military rule right here. That is something that we are getting. Yes, Chair.
For those of us who are interested more on the political side, ladies and gentlemen, Aaj Tak is showing a military officer, possibly a Bangladeshi military officer now addressing media, and so two things that we are very sure of, that Bangladeshi Prime Minister Sheikh Hasina has left her official residence in a chopper. This is after a series of nationwide protests in which more than 150 people have lost their lives. There is a complete ban on social media. The police have been withdrawn and the army is now patrolling Bangladeshi streets. And ladies and gentlemen, this is what we have from Bangladesh. We'll just wrap up the market today, Sakshi. Nifty down 2.7%, 24,057. This, remember, ladies and gentlemen, is also the budget day low. Let us see whether it holds tomorrow or not. Nifty Bank 1277 down 2.5% cut at 50,068. The Nifty 500, our broadest measure and the measure of retail participation in India, ladies and gentlemen, is down 3% at 22,536. Sakshi.
All right, we'll wrap it up at that, 660 points lower for the Nifty. But viewers, you stay tuned, because up next is an exclusive conversation with Mr. Dinesh Kumar Khara, the chairperson of SBI and Q1 results that our managing editor Siddharth Zarabi will be taking in just a few moments from now.